Hello and welcome to this weekly GoNoGo Show here on Thursday, July 27th. As always, I'm joined by the Chief of Charts, Alex Cole. How you doing, my friend?
Pretty good. I'm just about to get some business cards printed. That sounds really good. Chief
I
of
think that's
Charts.
the right title, you know? Who doesn't want that on their business card? Let's talk a little bit about the markets from a trend perspective using GoNoGo Charts. Alex, walk us through this global cross-asset heat map.
Absolutely. So, we've been seeing such strength in the equity markets for the last couple of weeks, and you can see that we've had a string of uninterrupted, strong blue bars now for a couple of weeks. So that's a really good sign for the equity markets in the top panel. If you look at the second panel, that's Treasury bond prices. You can see how that's struggled again this week and it's painting some stronger purple bars. Commodities, you can see how that as well is really doing well, painting a lot of bright blue go bars. And the dollar, as we'll see in a little bit, still in a no-go trend, but we see that weakness creeping in as prices have rallied this week.
Absolutely. So for those of you who are new to GoNoGo Charts, what we're doing is we're taking the tried and true, most heavily tested and used concepts in trend following, and we're computing all of that in the back end. What we're looking at on these heat maps is simply the color-coded trend conditions. So the weight of the evidence using multiple technical indicators. And we're displaying this heat map so we can see the absolute trends just on a comparison basis, just looking across the asset classes to see what is working. For those of you on StockCharts who have the ACP plugin from GoNoGo Charts, we're going to go through a lot of those GoNoGo Complete. That's everything that you need to trade securities in any asset class on any time frame. And these heat maps we use with a lot of our enterprise or institutional clients and in their portfolio review. If you've got an interest in using this yourself, feel free to reach out to us, info@gonogocharts.com. So Alex, let's move on from this cross-asset heat map. These are the absolute trends of just the four major asset classes. Let's take a look at TNX. As we talked about, there's been some struggle in the Treasury bond prices. Of course, we know that yields are moving inverse to prices. So that bond selling is the interest rates creeping higher. Talk to us a little bit about what we're seeing from a trend perspective on this 10-year Treasury bond yield.
Yeah, very much the same as we've been talking about for a couple of weeks now. Creeping higher, but really more of a elevated rate environment, not necessarily a quickly rising rate environment. You can see that we're still below the highs from March and below the highs from the end of last year. So we're still sort of correcting sideways, really, even though in the shorter time frame, this daily chart would definitely are in a go trend. But we would want to see us breaking above these prior highs, I suppose, if we were going to start talking about a sharply rising rate environment. So maybe elevated rates, but not rising particularly quickly at the moment.
Absolutely. We love to look at multiple time frames here at GoNoGo Charts. Let's pop this out to the weekly basis just to give some context for the fact that we've been drifting in this sideways range-bound market for quite some time. Very narrow range on the movement for the TNX, and we really haven't left that channel or that sideways consolidation, which is good news for equity investors and a risk-on environment at large. So let's move on. Let's take a look at the US dollar. We mentioned earlier we're going to take a look at the price action itself. Here at GoNoGo Charts, we use UUP as the ticker symbol for an ETF proxy of the dollar index. That's going to give us a look at volume as well. And for those of you who are using these charts at home, the complete GoNoGo chart is going to include that price panel, removing all of the clutter and analysis paralysis that a lot of us have suffered through for years with multiple indicators, lots of trend lines, moving averages, lots of other tools. Give us a clear picture of the price action. And then what we're seeing in that lower panel, same concept, blending multiple momentum indicators, a relative volume quotient, as well as a volatility indicator that's custom to GoNoGo Charts. So this is the complete view of the technical landscape for the US dollar. Alex, I'm seeing weak no-go trends on this daily basis.
Yeah, we've had a strong rally off that sharp drop that we saw a couple of weeks ago. But as you can see, weight of the evidence still says that the no-go trend is in place, painting that weaker pink bar. Now, if we go much higher, I would expect that to change. But you can see that we are up against a little bit of resistance from the lows a month or so ago. And you can see down in the bottom panel that the blended momentum indicator is testing the zero line again from below. So we know that if this no-go trend is to continue, then the oscillator should stay at or below zero. So We'll want to see if it gets turned away here by the zero line. And if it does, we'd expect price to move lower. If momentum is strong enough to push into positive territory, then this could really be a short-lived period of no-go bars.
Yeah, really important concept there with the GoNoGo oscillator or any momentum oscillator tool that you're using. If you can define an objective neutral level, then you can see that that can act as an area of support or resistance. So when we are within a downtrend or a no-go trend condition on the price panel, that interplay between price action and the momentum oscillator is critical. What we're seeing is that test from below. If that no-go trend is to maintain, and in fact, this is just another turning point for future lows, we're going to see that zero line hold as resistance to the momentum oscillator, the GoNoGo oscillator, and we'll see that turned away. Certainly, as a divergent indicator, if we see positive momentum in a no-go trend, that's a direct threat. You wouldn't anticipate seeing enthusiastic buying in a downtrend that's meant to last. So we're going to come back and talk a little bit more about the effect of this U.S. dollar. But when we look through interest rates and the strength of the U.S. currency, that's going to have implications not just for the equity sectors that are outperforming, but also for our global equity indices. And we'll come back to that in just a minute. Before we do, let's turn our eye to U.S. oil, the ticker symbol USO. Alex, we'll take a look at a few commodities, including some precious metals here in just a second.
Yeah, absolutely. I mean, U.S. oil, we've been looking at this chart for so long, it feels... a little
bit of a Bill Murray moment here with a Groundhog's Day reference, right?
We'll go ahead and put the channel on here, show people what we've been looking at. This is really where prices have been trading for quite some time, really since the beginning of the year, even back perhaps to the end of last year. But we've really tested and are threatening to break above now this downward sloping trend line. We did it barely, and it was a bit of a threat, but we never left the no-go colors back in April. This time we noted last week that we were coming up against this resistance, but this time on a change of color. We're seeing that amber bar that was where we were last week. Well, this week we're well above that level. We do seem to be outside the channel, still painting an amber bar. Now that amber bar, of course, represents uncertainty. Not enough criteria being hit to suggest a go trend or a no-go trend. We're in that market sort of undecided as we decide which way to head next. At the moment, we're seeing positive movement in price above that downward sloping trend channel. And also we've broken out of a max go-no-go squeeze, as you can see, into positive territory. So there's a few constructive pieces of evidence to tell us that perhaps this no-go is over, or at least taking a pause. And we'll see what happens next, in which direction price heads.
Absolutely. Great point to make about the volatility squeeze indicators. Some of you might be familiar with using Bollinger Bands or Keltner channels. The GoNoGo squeeze is delivering on that same concept, that from reduced volatility, we can often anticipate expanding volatility. And that expanding volatility, we want to pay attention to the direction of the break. So break to the upside from a max squeeze is telling us that in that tug of war between buyers and sellers, we're seeing some dominance on the buyer's standpoint. So that demand generation, moving price higher, still in a neutral trend category on this weekly basis. But Alex, if you jump down to the daily time frame and we take a look at those last two bars representing the last 2 weeks, we can see that oil is already back into a go trend again. Obviously, when in doubt, zoom out. This is a very choppy chart on the daily basis, but pretty decisive break outside of that downward sloping trend channel. Yeah. And we'll be watching to see if this can consolidate even higher and sustain above that.
And also, the first higher low and higher high, right? Like we've tried before but failed. This we've seen a high, a new high, a higher low, and then another higher high. So slightly more positive information for the daily chart as well.
Absolutely. So continuing with the theme of commodities, let's take a look at gold. And precious metals certainly behaving a little differently from industrial metals and the inputs to manufacturing. We're going to talk a little bit about the sectors of the S&P 500 in just a minute. But Alex, talk to us a little bit about this recent go trend and back into neutral here for gold.
Yeah, a little bit of a struggle to make up its mind. We've seen that across a couple of different assets this week. And you can see the general movement of this market is a move higher and then a bit of a correction, a move higher and then another correction. This correction was longer, and we seemed to fail a couple of times at areas that were providing resistance from prior support. But of late, the last couple of weeks, we were able to get a little bit higher than that and get into go colors. And you can see how that really corresponded with a break into positive territory on the oscillator. You mentioned that a break into positive territory while in a no-go trend is a threat to that no-go. And that's exactly what happened when we broke significantly into positive territory. Then that allowed the GoNoGo trend indicator to paint some go-colored bars, but already struggling, Tyler. So we broke into a new go trend, but we're already struggling, seeing some weaker colors and also some amber go fish bars. Very, very important will be what happens down here at the zero line for the oscillator. If there's any chance of this go trend to recover, we'll need support to be found at zero down here in the oscillator panel.
Absolutely. Points well taken. And let's move on a little bit. Let's pull up a chart of the S&P 500. Take a look at the large cap US equity index, and continuing to see that unstoppable strong go trend.
Yeah. I mean, really surprising many people, but once we broke higher, we've really taken off. With this was a long movement sideways. Once we burst out of that with some go trend continuation icons, we've really just been setting a series of higher highs and higher lows. And yet again, the last 10 days, uninterrupted bright blue bars, even really blowing past this counter trend correction icon that we saw here. There was a little bit of sideways movement, but right again, we're above it. Now, today's been an interesting day. We gapped higher and we've moved lower significantly. So it's an interesting day there, a little bit of bearish sentiment perhaps in the very, very short term.
Absolutely. I want to take a look at the emerging markets index. We can use an ETF proxy, EEM. And the reason to really advise everybody watching this show, we have to know that there are global equities that can present great opportunities for us, not just suffering from our home country bias. Obviously, the U.S. has been a strong outperformer for many years based on the prevalence of our technology sector and the information technology space in general. But when we're seeing that weakness in the U.S. dollar, that's obviously a tailwind to emerging markets. And Alex, if you just give us a little more context on this, on that sharp move lower for EEM. Let's pull the chart back a little bit. What we can see here is a pretty clear basing pattern off of this 2022 correction, right? The bear market from last year. We've struggled to move substantially higher, but we have moved into go trends, and we have now sustained positive momentum, breaking out of a GoNoGo squeeze to the upside, seeing some GoNoGo trend continuation icons, those green circles below price. And a lot of the analysts that I've been talking to this week, just pointing out what a great setup that is for emerging markets, and potentially leading to some outperformance through this next cycle. So very early innings for EEM and emerging markets broadly, but something to keep an eye on as well.
Absolutely, yeah.
So let's get back to the S&P 500, but let's get under the hood and take a look at the sector ETFs relative to the S&P 500. So again, we're going to use a GoNoGo relative strength heat map. So instead of looking at just the absolute trends of the sectors, we want to identify outperformance. Using that concept of relative strength, we're just dividing each sector by the benchmark index. If these heat maps seem like they'd be a helpful tool for you in your process, again, you can reach out to Alex and I for some of those enterprise licenses at info@gonogocharts.com. But Alex, I'm seeing a pretty strong rotation away from the growth equity sectors and very solidly placed in the cyclical sectors of the economy. Talk to us a little bit about what we're seeing from the top on down.
Yeah, very, very interesting. I mean, what we were looking at over the last couple of weeks was how some of these cyclical sectors were joining the growth sectors, but that's really not the case now. We're seeing a change. Now, again, these are relative maps, so don't forget all of these sectors could be in their own go trends, as many of the growth sectors are, but on a relative basis to the S&P, the leading sectors now have become those more sort of markers of the economy, energy, financials, industrials, materials, those cyclical sectors, rather than the growth sectors. So that's been very interesting for us to see all four of these sectors now outperforming the S&P.
Absolutely. I think the question on a lot of folks' mind, that separation for the Nasdaq from equal weighted indices or the Dow, looking at the outperformance of information technology, consumer discretionary communications throughout this strong move here in 2023. The question is whether we close that gap by catching down, if growth equities are going to topple to meet the more average performance, or if we're going to see a catch up, meaning the rotation of leadership into these cyclical sectors, if they're going to gain some ground to keep pace with the growth equities. So, Alex, let's take a quick look at just the XLK, which has entered on a relative basis, a weak no-go trend relative to the S&P 500. If we look at it on an absolute basis, that's not a pullback. That's a little bit of consolidation within a go trend. So on an absolute basis, these are still performing well and trending higher. But when we think about outperforming a benchmark, we have to know that it's that relative leadership where we need to place our overweight bets. Yeah. For me, the real telltale sign is that go-no-go oscillator, Alex. We're testing the zero line. What would you say about this chart right here?
Well, you can see the difference right away. I mean, we were looking at the S&P and it was at a higher high, right? We were talking about today being a bit coming back a bit, but we gapped higher, and you could see that we were in a string of those strong blue bars just moving ever higher. That's not the case here. We've had a bit of a consolidation, as you said, some weaker aqua bars, but the trend, of course, continues to be in place until it isn't. And so we are in a go trend. We're looking at the oscillator to see if momentum can stay on the side of the trend. That's what we're looking for. If we get continued support at the zero line, as we have for the majority of this move, then we would expect the go trend to remain in place and for price to attack prior highs. So slightly different picture in terms of it taking a pause rather than the S&P is going, continues to go higher, but certainly not trend reversal yet. We're looking for signs of continuation for the technology sector.
Absolutely. And let's take a look at a couple of those cyclical sectors, starting with the XLI, the industrial sector, which was the first one to join the leadership groups coming out of our growth equities sectors. And look at that on an absolute basis, just really thriving. Strong
moves higher, fast moves higher. That's where you get the outperformance, because it's taking off at a little bit of a quicker rate relative to the S&P.
And as we saw in USO, potentially a breakout above that downward sloping trend channel. Let's take a look at XLE on an absolute basis.
Yeah, XLE is a little slower, but starting to race away now, and we see some of the bigger energy companies doing well. But still a lot to get through for energy. We've got we're still trying to get higher than this most recent high of the move from April.
Absolutely. Let's pop that to a weekly basis real quick, just to give a little more context to this more recent move.
Yeah, so you can see how weekly we're still struggling to get up above where we were earlier in the year and certainly at the end of last year. But you can see again, just like with the US oil chart, we're seeing those bars of uncertainty creep in as price moves higher. And look at the oscillator again, for the first time since we left this go trend, breaking into positive territory. So lots to watch for in the energy sector, just like there was on the oil chart.
So let's do a little rapid fire, a number of individual names. Last week on the GoNoGo Show, I spent quite a bit of time on the financial sector and even on regional banks, the KRE ETF representing some regional banks. The idea being to separate our investment decisions from the narratives that we hear from our own emotional bias. It was not very long ago that we were watching regional banks collapse, Silicon Valley and Signature and others. But what we're seeing right now for the XLF is an outperformance of the S&P 500 on that sector basis relative to the index. And we're seeing a lot of names cropping up that are strong outperformers. So as Kennedy said, a rising tide lifts all ships. Let's take a look at some individual names, Alex, starting with Caterpillar in the industrial sector, CAT.
Yeah, so we've got a lot of these industrial names moving forward. And just from looking at the chart, you start to put your old traditional TA hat on, and you can see a series of higher highs and higher lows. That's an uptrend. You can see that we've been supported by the zero line a couple of times since we've entered the go trend. And now we're looking at a very important moment. If the go trend is going to continue for Caterpillar, then we'll want support at 0, and that would give us trend continuation, and we'd look then for a new higher high.
The TikTok traders of 2021 talking about BTFD, buying the dip, if you will. We want to be objective and scientific about that. So with GoNoGo charts, what we look for in that support of the 0 line, if we can see momentum find support and regain positive momentum on the GoNoGo oscillator, that's the opportunity to buy into those pullbacks and that weakness. That's how we think about methodically doing something rather than, as the TikTok traders say, just BTFD. Let's move on. Materials name, US Steel, ticker X. And we talked a little bit about the steel index last week. Here's a individual equity showing us that same early stages of breaking out of basing territory.
Yeah, I mean, definitely some congestion to get through from earlier in the chart. But again, break to the go trend coming after the leading indication from the oscillator as it breaks into positive territory, following a transitionary amber bar of uncertainty, and then the go trend takes hold. And then we immediately look for any pullback, whether or not, as you said, the oscillator finds support at 0. That tells us that momentum is resurgent in the direction of the trend. And so those are opportunities, as you said, to buy the dip. And you can see that all through the right side of this chart, oscillator continuing to find support at 0. We'll really want to get a little higher, set a new higher high, and then challenge these highs from April.
Absolutely. Let's move on and take a look at another industrials name, John Deere. DE is the ticker symbol.
Yeah, something similar for Deere. There's been a strong pullback the last couple of days, but we're going to look to see, again, is this an opportunity to buy the pullback? Of course, we're looking at having quite a bit of support from prior highs. That concept of polarity is so important. We talk about it just about every week, but prior high here on the chart, we've got prior highs in the go trend already that we've broken above. Those should now act as support as we get a little closer to them. And we've found support at the 0 line, of course, already. And so that's what we'll be looking for again. Support from 0, support from prior highs. So this could be one of those opportunities to get into a trend at a relatively sensible opportunity. Now, of course, if we break below support, break below 0, okay, then we reevaluate. But this could be an opportunity to make an entry.
Absolutely. Let's pull up Cummins Engine Company, CMI is the ticker. And we're seeing a lot of these industrial names, a lot of the inputs to manufacturing and to commercial transit really outperforming.
Yeah, I like this chart, Tyler, because we seem to be a little bit further ahead than we were on the last chart. We're above these highs already from April. We've already made newer highs, and we're actually testing or even consolidating above high levels from earlier in the chart. So, this one looks nice to me. We've had a couple of higher highs and higher lows. We're moving sideways now. Some weaker go bars. Oscillator, though, still in positive territory, not even at 0 yet. So this is a nice looking chart for Cummins.
Absolutely. And let's jump out to the weekly basis and take a look at 3M. Just to give a little more context to the early stage of a lot of these trends. If you're a longer term investor, we've got a lot of ground to make up, but pretty significant multi-year breakouts happening on some of these industrial names. Yeah,
this is really interesting because, like you said, it's a couple of years that this no-go has been in place, and it's really been strong and infrequently threatened. Not breaking above this downward sloping trend line, not leaving no-go colors, for a couple of years. Every time the prices rallied on weaker pink bars, fell right back away, becoming stronger again as prices move lower. And you can see that, generally speaking, 0 line acting as resistance, as you'd expect it to, over and over and over again. Look at all those no-go trend continuation icons, which would have allowed you to participate perhaps in this no-go move. Well, this most recent bar, this is this week, of course, we'll have to see how we close tomorrow, but an amber bar for the first time in several years, since the amber bars that transition does between the go and no-go. So we're seeing an amber bar testing that downward sloping trend line. And look here, we've got the oscillator breaking into positive territory on heavier volume.
So at the very least, we'd want to cover our shorts.
Yeah, at the very least, you'd be ready, right? Get ready in case of trend change,
Excellent. I know there were a number of financial names that we wanted to look through, but in the interest of time, why don't we take a look at a couple of energy companies that are performing within that XLE sector that's outperforming the S&P 500, starting with Valero, VLO.
It's same thing happening on the weekly. You can see it trying to change, transition into those amber bars. But on the daily, you can see how quickly that's moving. What's interesting here is we've had that go trend identified, and we've had a retest already of the zero line in the form of a max go no go squeeze. So that's a real tug of war between the buyers and the sellers, and that's been broken into positive territory, which gives us trend continuation. Another nice sign is that that's also giving us new highs. You can see that that's quite a couple of month long basing period, and now that breakout of the squeeze has given us some clear new highs for Valero.
Absolutely. And let's pull up, last but not least, a chart of Halliburton, energy exploration, drilling, and extraction. Also looking pretty good.
Yeah.
A recent retest of the zero line and a trend continuation icon back in strong go bars.
Yep, absolutely.
Fantastic, Alex. For all of you who are watching this show on YouTube, thanks so much for checking this out. The GoNoGo Charts Complete Toolkit, what we're looking at right here on screen, is available through the StockCharts ACP plugin. Hope you check that out. And by all means, if you have any questions, shoot us a note, info@gonogocharts.com, and we'd be happy to get in touch with you. Until next week, take care of each other and trade them well.